U.S. Treasury bonds versus home ownership. Which is a better investment? How do you know it's better? These are all good questions, and all of us at some point that have opportunities to invest in one or the other or both should take a look at and analyze and see which is better for each one of us. So let's dive into that. Hello, I'm Jason Walker, and glad you're on board today. So anyway, here's a real life example. I'll try to get focused in there. As you can see, I'm holding a $50 U.S. Treasury bond that was issued in 1989. I found it here recently, and I'm getting ready to go cash it in. And after 30 years, this was a 30-year bond, so of course I'm about 4 years late at collecting my monies, but anyway, kind of forgot about it, didn't have it in my possession, whatever. And so I'm getting ready to go cash it in and go through that experience, because this $50 has been sitting in the bond and being used by the United States government and tied up in the bond contract. So it's time to relinquish that money back to me and get title of that money back into me. So anyway, before I cash that in, I wanted to do a quick video and kind of see the performance of that bond versus owning a home or owning real estate, because I'm a realtor and I sell real estate. We always talk about how real estate's the best investment in the world, but why? Very, very seldom do we know why, or do we have that conversation of why. So anyway, I'm going to dive into that and show you some things and let you make your own conclusions from this. So I'm going to jump over to this page, the treasurydirect.gov. We see that here. This is the U.S. Treasury information page, if you will. There's a lot of good resources on here. In fact, I never spent a lot of time on here until this week. But anyway, one of the things they have is a calculator to see what your bond may be worth. Okay, right here. So this is a $50 bond issued in 1989, matured in 2019. And so here we see the interest that it was accrued, $78.68. The value of that today is $103.68. Now, after 30 years, it quit accruing interest. So I know even today, that's going to be the value. So anyway, if you have bonds or you want to research about bonds, this is a good website to kind of tap into. Oh, here we go. In this blue, you kind of see the numbers better. But anyway, next, I'm going to take you over to some historical data for the median household price for the United States. This is provided to us from the Economic Research with the acronym of FRED. Anyway, median U.S. house prices for the United States starting clear back in 1963. So anyway, this bond, I'm going to compare apples to apples. I'm going to jump up here to 1989. I'm going to move my cursor along here. There's the first quarter. Average price was $118,900. Second quarter, $118,900. Third quarter, $120,000. And the fourth quarter, $124,800. That was the average median sale price for homes in 1989 in the United States. Now, this bond expired in 2019. So we're going to jump over here to 2019. The best price I can find for 2019 is $327,900. For the sake of this conversation, that's going to be the numerical value that I use. So I put together a quick little spreadsheet here comparing the US Treasury bond and owning real estate, basically. So we know the cost of this was $50 hard cash. We wait 30 years. After 30 years, it was worth $103.68, netting $78.68. Or what that equates to is $2.62 growth per year return on investment, which on a percentage scale is 5.24% growth per year based on the initial $50. Next, the US, I'm gonna zoom in here, sorry. Okay, so next is the US median home and what it would cost in 1989. So there's that $124,800, assuming that you paid cash for it. Okay, this isn't getting a mortgage or doing a 20% down payment and financing the rest, or whatever loan might have been available for any given person at that time. I did not take that into consideration. I'm just assuming that if you're going to pay cash for US Treasury bond or pay cash for a piece of real estate, let's compare apples to apples here. So anyway, we wait 30 years. In 2019, the average home cost was $327,100, netting $202,300, or a $6,743 growth per year, or 5.4% return on investment per year. So we see here on our cash bond that it was a 5.24% return on investment, and the real estate was 5.4. Now, instantly, you're going to say, well, that's not a very big spread. Like, it is what it is. There wasn't a lot of difference. Both were safe investments. That's true. But here's how the numbers shake. So we got a 0.16% difference. Comparing apples to apples again, the difference, 0.16 times 124,800, assuming that, hey, maybe I had $124,800 to put in the US Treasury bond, or I could put the same amount of money, $124,800, into a home or a piece of real estate. That nets us $19,968 to the advantage if we had purchased real estate versus the US Treasury bond, or a $665.60 per year greater gains, which doesn't sound like a lot, but when you consider when you compare an apples to apples, over the course of 30 years, I made an extra $20,000 just by owning real estate and not the US Treasury bond. So this is where we start having this conversation of, owning real estate is one of the safest investments in the world, is because of scenarios like this. Like US Treasury bonds, whether they're 10, 15, 20, 30 years, whatever, they're safe too. Like, that's the safest. It's a government issued bond. The United States is typically the strongest country in the world. Like, that's a really safe play, typically from an investor's point of view. The difference here being that the real estate outperformed, on average, outperformed the US Treasury bond. Now, granted, the housing market or real estate market, you're going to find ebbs and flows that are different based on the location or the housing type or whatever. So that number can fluctuate a little bit, whereas the US Treasury bond is what it is. Like, that isn't going to fluctuate. The returns are going to be the returns. That agreement is made up front when you purchase that bond. So anyway, some other reasons that may make real estate a better investment than the bonds, that I'll just share with you and kind of soundboard. The real estate, I could have went and bought that piece of real estate, the purchase price being $124,800. but I could have got a loan to get myself into that, right? So I could use part of my money as a down payment, go to the bank and use some of their money for the rest of the purchase price. Whereas US Treasury bond, you're not going to be able to split the difference, right? You're not going to go get a loan just to go purchase a bond. So there's one advantage there. If it's buying a home, you're putting a roof over your head. There's there's probably homeless people out there in the world that own US Treasury bonds, but does that put a roof over their head? No. So there's a physical and tangible use for real estate, whereas the bond is strictly an investment. That's it. It's not a tangible or a useful asset in your everyday life. With owning real estate, you're going to find some sort of sense of pride of ownership. That is yours. If you own it outright with no mortgage, no liens, it is truly yours, just like the bond would be. But you get to feel it, touch it, see it, smell it every day. Whereas the US bond, you just know that it exists out there in the world. You've given that money back to the government on loan, and they're paying you some interest for the use of that money. And as we see here in this example, historically speaking, over a 30-year run, real estate just outperformed that US Treasury bond enough to, I think, in my mind, make a difference. So anyway, thanks for tuning in. And let me get back here. Thanks for tuning in, and I hope you find this information useful in whatever types of decisions may lie ahead of you in your investing career. And thanks for being a subscriber and tuning in and watching this short video. If you got anything you want to talk about or things of interest that you'd like to discuss, leave a note in the comments section, call, text, whatever, get a hold of us, toot the horn, whatever, and be glad to get with you. Thanks, and make it a great day.